The first thing I tell every patient, audits are expensive even when you win. Best case, you spend months producing records, responding to notices, providing what you have already reported, and you come out exactly where you started. No refund, no credit, just time and legal fees. Think about what a peer review or license board complaints cost you, even when you are completely cleared. It's not just the legal fees, it's the hours away from your practice and family, and your mental bandwidth and disruptions. An audit works the same way. The outcome isn't the only cost. For a physician or dentist, your billable hours have a real dollar value. A disorganized audit response can run into tens of thousands of dollars before it's resolved. That's why the goal isn't avoiding an audit. It's being built to move through on cleanly when it happens. So foundation of that is real-time documentation, not a year-end catch-up, not a spreadsheet your bookkeeper assembles in December. A system that ties receipt to transaction, records business purpose at the time of the expense, and produces a clean general ledger on demand. You already lived this standard in your clinical work. Meaningful use, MACRA, payer audit, they've all conditioned you to document at the point of care, not after the fact. So your tax records need to work the same way. The IRS does not credit for reconstructed documentation any more than a malpractice attorney gives credit for an amended return. When the IRS asks for your general ledger, and they will, you may want to hand it out over hesitation. That shift from adversarial to administrative is a difference between an audit that costs you nothing and the one that costs you everything.